Glad to know you're still with us. And very quickly, we'll be looking at select interim dividend paying companies. We'll start with Stanbic IBTC. So we'll look at between 2017 and 2021. We'll look at their Q2 earning per share throughout this period. And then we'll also look at the dividend they paid throughout this particular period. And then we'll project, for 2022. So let's start with Stanbic IBTC. For 2017, Q2 earning per share was 2 naira 86 kobo. Meanwhile, in 2018, it was 4 naira 74 kobo. In 2019, 3 naira 42 kobo. In 2020, 4 naira 20 kobo. And then in 2021, 2 naira 87 kobo. Then looking at the dividend that they paid during this period, 60 kobo in 2017, 1 naira in 2018, 1 naira in 2019, 40 kobo in 2020, and 1 naira in 2021. Let's start with you. What happened?
No, like I always say, the banking sector are the most consistent in terms of interim dividend, and they are the one that even introduce interim dividend to the market. I can see that spreading to other sector. But if you look at the Stanbic IBTC, yes, their payment has not been on the uptrend or that trend. It oscillates. They pay there. They tell you that as the end they pay, the period the earnings is low, they pay you low. When it's up, that is another way of kind of do what we call equalizing dividend policy. When your earnings are better, you pay better. When no, just like to make sure that you kind of reward the shareholders for having confidence in you. But for me, I've said that Stanbic is one of the defensive banking stock I can see because of their sharing issue is very small. At the same time, shareholding structure is tight, and being a financial sector, I would say that anywhere in the world, the engine of any economy is the banking sector. And knowing that this Stanbic is more of foreign business, in Nigeria and others, I think they are consistent. But I believe that looking forward to see their Q2 number with their improvement we saw in Q1 after they have really performed not too impressive in 2021. But I've seen that they are starting 2022 on a good note. If that is sustained in Q2, a better half-year dividend trend will come at the end of the day.
All right, very quickly, Alhaji, can we have your thoughts on Stanbic IBTC? Alhaji, can you hear me?
I hear you loud and clear.
All right, please go ahead. Let's have your thoughts.
Well, my concern with the Stanbic, yes, they are consistent in the interim dividend. If you cast back before then, at times they pay as much as 70% of their final dividend as an interim dividend. And that's what makes me to wonder, how do I go Stanbic? Do I buy it and sell before the final dividend, or what do I do? Because honestly speaking, before 2017, at times they pay substantial part of their final dividend in the interim dividend. Maybe this has to do with the foreign exchange, because most of the time, whatever they declare, they won't take it away outside the country. But notwithstanding, you remember Stanbic came with the policy of subscription or dividend. They will give you the option, take your dividend, or they are willing to take more shares. And that is one area that gives them an edge over the Nigerian, because the Nigerian won't take their dividend while the foreigners won't increase their holding indirectly. Yes, these are the two issues that my concern with the Stanbic, but notwithstanding, it's a bank that is consistent in paying interim dividend, and they never change.
All right. Thank you so much. Do you have anything to say about his concerns?
No, it's very okay.
Okay, yeah, all right. Okay, very quickly, let's check out custodian investment. The same thing applies, 2017 to 2021. We look at Q2 earning per share, and then we'll also look at dividend. So for 2017, they paid 58 kobo. For 2018, they paid 63 kobo. For 2019, 67 kobo. And then 2020, 67 kobo. And then in 2021, 79 kobo. Looking at the dividend, 7 kobo. In 2018, 10 kobo. In 2019, 10 kobo. In 2020, 10 kobo, and then in 2021, 10 kobo. So what do you have to say about this?
Yeah, this is one of the, before this company was under the insurance sector, but when they started expanding, they were related to other financials, and they've been consistent in their dividend payout and their, in their performance. Also, as they're expanding, acquiring more company now, you can see that their number become better. But I expect that going future, they should also grow their payout in terms of interim. They have paid 10 kobo consistent for more than 4 years now. I think they should up their
But
game.
when you look at their earning per share, you might not want to blame them. 63 kobo, 67 kobo, 67, then 79 kobo.
Yeah, if we, like you just said, if at the end of this Q2 now they were seeing 80 kobo 1 naira, nothing stop people by paying 15 kobo. It's an interim dividend. That's why I say if their number become better, let them grow their payout because they've been consistent for 4 years, 10 kobo. As they go forward and see improvement in their number, they should also up their game in the payout of interim because these are consistent in their interim. The good thing is that when you are a company into interim dividend, your ability to manage your share price become easier for you because people enter to buy for interim and who to also take the final dividend. That means you see the more investor will hold your position in the company, then the share price will remain stable because they are not selling to others because they know that also might go out and come back. But there's some long-term investor that will not take advantage of, if I'm taking my interim, let me also take my final at the end of the day. So those are paying for, for dividend income. The retirees and those that don't want to play risk of speculating in any market, any stock, they can do that buying. That's why I see, check the life of all the interim paying company. Only few of them, their price fluctuates easily, but because of that policy, people are still holding on to see that I will take my interim and also take my final.
All right, Mr. Jimo, if you're with us, we'd like to hear your thoughts on this particular one. We're looking at custodian investment and what you have done in a period of 5 years, and we're also looking at projecting for 2022.
Yeah.
Mr. Jimo, can you hear me? Oh, okay.
Hello?
We're not able to hear him. Okay, Mr. Jari Ogbe, if you can hear me, please go ahead.
If there's anything we can take home from the history of custodial investments, is the fact that they are consistent in dividend payment. But again, when you look at the growth that we have seen so far, we might expect that they build the dividend, the interim dividend payout, at least, if not by anything, by 1 kobo. Maybe they can do 11 or 12 kobo. That's what I'm expecting from them. But that they will do 15 kobo, that is it's a thing that we need to look at very well. So I think if they can do 80 or 82 kobo earnings as the end of this half year, then we should be looking at 12 kobo or 11 kobo from them.
Okay.
That's too slim, but
no
of course,
problem. It's good.
okay. All right, let's move on to AXA Mansard Insurance. We're looking at 2017 to 2021, and then the earning per share, Q2, then the dividend. So in 2017, AXA Mansard had 14 kobo. 2018, beg your pardon, 2018, 15 kobo. 2019, 12 kobo, and then 31 kobo in 2020. And in 2021, 6 kobo. And then looking at the dividend paid out, 4 kobo, that was in 2017, and then 3 kobo in 2018, another 3 kobo, that was in 2019, and then in 2023 kobo, and then 2021, nil. Let's have your thoughts on that.
Yeah, like I said earlier, is your performance determine once you go. I like tell you that you don't give what you don't have. You can see how consistent they are. But in 2021, the performance of Mansard was not too impressive.
I'm curious, what happened to them?
Yeah, like we can say take a claim increased, and also we didn't see good numbers at that period. But we're expecting that now might see better number since we saw 25 kobo dividend for the full year, and that's a result they didn't pay for that before. They paid 10 kobo and paid final of 50, but they give us 25 kobo for the year 2021. That means that they've covered the previous trading pay. But let's see if they go to open trade this time, the numbers will only determine, because you can't give what you don't have.
Exactly.
If the numbers are improved, you can see that the Q1 was not too impressive. If we see a better number for Q2, that will also support a payout, and that will also support the price.
What's your advice to investors, really?
No, there are investors that they have long-term goal, and you see a company that don't share the construction, and if earnings improve, numbers will also improve because the number of shares has reduced. If they perform well, it's going to boost their performance, their earnings with earning per share. That also determine what will come out, because you can't give what you don't have, and also the proportion of what you earn determine what you also are going to pay as interim dividend.
All right, thank you. Alhaji, let's have your thoughts. Alhaji, if you can hear me. All right, I guess we have a connection issue with Alhaji. Mr. Jimo, if you can hear me, I'd like to hear your thought also.
Hello?
Okay. All right, Mr. Ajari Ogbe, let's have your thoughts. Let's have your take on AXA Mansard. All right, I guess we're having issues connecting with our guests virtually.
The interim dividend for the insurance company may not add any much value to it.
Okay.
The best for the insurance company is to pay the final dividend because that's what their peer groups does. The same thing with Lapat. So when you are in the industry that they don't pay interim dividend, there is no need for you to pay interim because it adds less value to your market value. Thank you.
Okay.
Okay, thank you. Do you agree with him on that?
We're analysts. We have different thoughts.
Okay, because I know you're someone who really you like interim dividend.
No, not really. But we support the company to manage. Kind of help you to manage your price when you pay interim. Like Alaji said, it depends on the company. Goal. If some company want my price to be stable, because when you look at the company price, it gives an insight the value of the company. Like I said, price tell a lot of what the company is. You see Nestle selling for 1,400. Once you see, you know the value of the company. We see a company that is selling for 5 kobo, for 20 kobo, sorry. You know the value. I mean, when you pay interim, it helps. Even you can see the big name, Steplat pay interim dividend. Look at the life of Nestle interim dividend. Look at the Nigeria interim dividend. You know why they do that. It helps you also to manage your price. But if you are said no for insurance company, it doesn't make sense. But like I just said for Mansard, they didn't pay interim dividend for 2021, but at the final they paid 25 kobo. You can see there's it makes a lot of sense if they are changing. But I believe that interim dividend will help any company to manage their price movement. So he alluded to WAPCO. WAPCO just started it. We want to see if WAPCO will be consistent in that. Yes, it might not. We're not seeing the impact of WAPCO interim dividend for the first year they started. If become consistent in that and going to the future, it will change the way the market will value WAPCO, because WAPCO performance for 2021 was impressive. A company that did about 311 kobo and they paid 2 naira. Even though they split it to 1 naira, but that also will help them to manage. If to this year now we'll see WAPCO doing that, the market will not change their perception about WAPCO, that this in the sector where they started paying dividend. You can see that the way they value WAPCO will also be different. People that want to take in and stay, it depends on the performance. But I believe that your number will say what you want to do. If they also move their interim from 1 naira they paid last year to 1 naira 50 kobo, you see the way the market will react to it will be different. The way they reacted for the first year they pay 1 naira. It's just market like student just said, we trade news, but for traders, you look at your chart to trade news. Don't trade news because of your hearing. Look at what the market is doing, kind of psychology, sentiment, and that, because the candlestick will tell you exactly what the news is all about. If you're trading news alone, you might be trading news that people are even exiting, but you want to look at the candle, what is the reaction, the candle always tell you. That's why, as a trader, this information is what market feed on to appreciate the stock.
All right, thank you so much. Mr. Jari Ogbe, do we have you back now? Can you hear me?
Yeah, I can hear you very well.
Okay, very quickly, in less than 1 minute, let's have your thought on this before we move on.
Based on what the outcome of the conference call after the last release of their financials, we expect the half-year earnings to be better. If that is achieved, I expect the Mansard to still pay their 3 kobo at the end of the half year.
Okay.
All right, thank you. Okay, so let's move on now. We're going to Consolidated Hallmark Insurance 2017 to 2021. And then for earning per share in 2017, it was 2 kobo. In 2018, 2 kobo. In 2019, 4 kobo. In 2020, 4 kobo. And then in 2021, 5 kobo. And then looking at dividend for 2017, nothing. And then 2018, 1 kobo. 2019, 2 kobo. 2020, 2 kobo. And then 2021, 2 kobo. I'd like to start with you, Alhaji. Let's have your take on this particular result.
Of which companies?
This is Consolidated Hallmark
Insurance, yeah.
Consolidated Hallmark Insurance.
Yeah.
Well, you see, the Consolidated Hallmark Insurance, I see as a company that has a hope.
Yeah.
Hope in the sense that they have been consistent in declaring profit and trying to be consistent in declaring dividend.
Yeah.
With this, we hope that they continue, and it's just a matter of time it will be lifted from the penny stock.
Yes.
Because any stock that traded in kobo we see it that it still remains as a penny stock. But with it consistent in paying dividend, it qualified to be invested by the institutional investor like PF, and it gives the hope to the investors. And we hope in the matter of time that its price will change irrespective of the dividend that has been consistent. Because today they are just much and priced the same way as the stock that have not paid dividend.
Yeah.
Okay.
Yeah.
Mr. Ajario, let's have your reaction to that.
If you just look at all these insurances as if they are bent on paying a static amount all through. And you see, when you are doing valuation and there's no growth rate in dividend, you see that the value will almost still remain. That's why you see that the interim dividend is not actually impacting their price so much. Well, let's see. If we will see a growth, investor will definitely price you by what you have what you have done. So except they start building their interim like the banks are doing, we may not see the corresponding effect on the price.
Okay. Taken. Let's have your thoughts.
Yeah, I agree with Elijah and Elijah and Tunde, because when it comes to payout in dividend, we have to be consistent. And when we are consistent, PFA will be looking at, because it's one of the requirements for a PFA to invest in any company. You must be consistent in dividend payout for at least 5 years. And you can see that this hallmark has been consistent. According to today, because they are not growing their payout once they grow their payout, that will also change the price. And when market appreciate this, the price will not remain as a penny stock longer. People are selling below below 1 naira. Once it cross 1 naira mark and they are consistent, that was also going to drive their price.
Okay, I think you've been talking about PFAs a lot this morning.
The good side of consolidated Goldman Bank insurance is that they are paying 50% of their earnings.
Yes.
And this is a very good one, because if banks will pay 50% of their earnings, they will have paid much better than what they are paying today. And that is something that I want the investors to look into. We hope that their earnings will grow so that we have more dividend.
Yeah.
Okay,
thank you, sir.
Thank you.
Yeah. No, when we say the PFAs are institutional investors. They have the big money to play around, and that's why when the MPR was adjusted, they decided to adjust their portfolio. They also understand the market. They invest with knowledge. They don't guess. They don't like bad wagon. These are professionals in the market. As I say, market has turned to a professional market that you see more traders than it. But these PFAs, because they are long term too, they invest where there is what fundamental. And when they see that there's the prospect in that sector, that's how to, because they are managing people's future.
Exactly.
And therefore that they don't guess guesswork. That was for retail investor, you can be reacting to anything, but institutional investor will take time to do the analysis, due diligence before they take position. That's why when people are ready, they'll keep quiet. And when they move, market fully, because they have what we call a hot money.
True, our money actually.
They have the hot money. Yeah.
I think Alaji wants to say something.
Yeah.
Yes.
Hello, sir.
I believe that it's just a matter of time. We will come to realize that companies that pay you interim dividend and final dividend, by the time you computed the yield, is much better than someone that pay you final dividend once in a year.
Yeah.
Because that dividend you have collected at the interim, you can reinvest it and generate you more returns before the final dividend. Yeah. And the earlier we realize it, the better we reward those companies that pay interim dividend. For now.
Okay, that's a good one coming from Alaji. That means you both you're beginning to agree.
No. We are seeing the same market. Everyone has its own, and I love that he's also seeing what I'm seeing.
Okay, that's a good one.
You see what I'm seeing, exactly.
Okay, very quickly, let's look at Total Energies. After which we then just breeze over Adova, because it just posted their result. Okay, so for Total Energies, 2017 to 2021 Q2 EPS and dividend. That's what we're looking at. And then we had 13 naira 57 kobo, that was in 2017 EPS. In 2018, 16 naira 71 kobo. And then something happened in 2019. It became 38 kobo. And then in 2020, it became minus 1 naira 58 kobo.
Okay.
That was in 2020. Then in 2021, it became 23 naira.
Okay.
And looking at the dividend, 2017 to 2020.
This is the interim dividend. It pay more than that. Look at the final dividend, it pays substantially.
Exactly.
Interim is for Naira, but what they did in the final dividend, they almost rewarded what they have not paid for the last 3 years.
Yes, exactly. Yeah, correct. That's nice.
Okay, so let's.
No, I agree with him. You know, Total is a company that will respect in Nigeria because they are consistent in their full year and the daily dividend payout. But in 2019, 2020, there was a slowdown because of the COVID-19 oil price of, and also they too their prices were down and performance was not too impressive for that. But the years after, you see that they have to cover. They pay for Naira dividend and final for for 2021. It tells you that this company is where you can still look at, and the price jumped back from 109 Naira to almost 230 because of improved performance that has just started the runner from the company. For me, it's a good one for Total. And being the sector it is, Total has successfully passed their cost to consumers. All the lubricants in the market, they've increased their price. I was in the situation to buy 5 liters of oil for almost 10,500. What they sell for just 6,000, 7,000 in just previous years. Tell me that that is that they will push their cost towards the consumer. And you can't say because there is increase in their cost, they don't want to service your car again. There is demand for their product. That is why we expect more improved number to come. And if they do well as we expect them, they also pay better into dividend at the end of the year, pay final that they've been consistent with before now.
I'm really concerned about the fate of consumers because a lot of these things that are being pushed to consumers at the end of the day, that it's going to drain their pockets. I mean, even their earnings are going to shrink, eroding earnings, and that's a lot. So what happens? That's
right. Some companies that have a close substitute for their product, and investor can really adjust, consumer can really adjust. But when your product is what we call, they have a inelastic demand. Whether you adjust price, there's still demand, you can easily make money. But those companies that there's substitute for your product, once you increase your price, you can look for where there is a lower price and goes. That will affect the company. And that's why, as an investor, look at sectors or industries that where even there's price increase, people still demand. Like look at the sector of industrial goods, cement. Even cement price continue to go up. People still buy cement because they want to build. There are sectors that even though energy like Transcorp today, even though they carried NEPA, what they call the megawatt, what they call it, in bit, they increase the payment today. The people still use light. You have to pay. There are some companies that they have service or their product, especially those that do utility, that even when they increase price, when they increase price, there's still demand. There's no cost for life for those companies. They will still make money, and that's why investors should look at where can I hedge against inflation to target such companies.
Okay. All right, so Mr. Jima, if you're still with us, let's have your thoughts on this before we just check out what Adova has done.
Are you talking to Jarogbe?
Oh, okay. Yeah, please go ahead.
All right.
Can you hear him?
Yeah, I think he said this is Mr. Jario.
Okay, Jario, okay, go ahead.
Yes,
okay.
Please go ahead.
Okay. I don't have the total details for the interim, but based on what you have just shown us, the interim is just a new thing that they are starting, and of course there is no trend for now. So we still expect that they will do something this year, given the fact that the oil market is booming as we speak, and they should report a better profit, which could translate to an interim dividend for investors. But again, if you want to say precisely whether they will pay or not, you can't actually state a trend that could give you that assurance. So it's just a 50-50 thing as we speak, as far as I'm concerned.
All right, thank you so much. So very quickly, let's go to Adova. We just, like I said, just 2 or 3 minutes. That we just spend about 2 to 3 minutes on Adova because we just have a breakdown of the results. So we just look at it. So Adova PLC blames subsidiaries for 3.8 billion naira full year loss. Report 63 billion naira revenue in Q1 2022. Well, oil and gas retail giant Adova PLC reported a loss of 3.8 billion naira for the year ended December 2021. This was contained in its audited financial statement published by the company. According to details in its financial statement, Adova's loss of 3.8 billion naira is a reversal from the 1.8 billion naira profit reported in the previous year. This is also the first full year loss reported by the company since it was transformed from Forte Oil PLC. The company acquired Enyo Retail and Supply Limited ERSL in 2021, making it one of the oil and gas marketing companies with the largest retail network in Nigeria. Alhaji, let's have your thoughts on this particular one before we close. If you can hear me, Alhaji. Okay, Alhaji, I believe you're with us. Please go ahead. Let's have your take on Ardoba.
Yes, I'm here with you. Well, actually, Ardoba is a company that comes in, but the market did not understand them. And they failed to make the market to believe them. Because this is a company that come and acquire almost 70% of the share at 66 naira 25 kobo. Today is covering between 12 to 13 naira. That is not good enough.
Okay. Oh, all right. I think he's done.
Yeah, for me, like analyst, look at a trend. I'll tell you that since the major shareholder in 40, sold to the people that are now in charge, the Adova, that changing into Adova and other stuff, they've not really performed well in terms of number, and they have not paid dividend that is coming to their price. That is why the price has to drop as low as 12 naira or 13 naira that is selling now. Until we see improved performance, the market can appreciate the company. But the sector where it's operating today has a positive fundamental news that is driving performance, and also the prices are there. But for this company, we are seeing a reversal in their numbers that was already released, having about 3.8 billion loss against 1.5 billion in the previous year. Yes, they attributed to some reasons, but
and they were talking about their inorganic expansion or growth plan also affected them.
No, if you are acquiring, you have different, like you just said, you have organic growth, you have
yes.
If you are acquiring to expand, they said now, I think they can say they are the best, the highest in terms of retail network for the market where they operate. But I see that until start seeing the impact of the acquisition they've done, and the reform they are doing that company, or the structure they are doing, then before market can appreciate them. The number for 2021 was not impressive. I will tell you, even the top line was just marginally up. But if you go to 2021 first quarter, also in that same direction, it dropped from about 1 point something billion 2021 to about 192.3 million in 2022. You can see there also a huge decline in terms of profitability level. Until we see an uptrend in their portfolio, that is where market can appreciate them. And I tell you that this market is a market that has been run or been invested by professionals, and those that also that are knowledgeable. That's why investors are escorted to give method education. And people that are learning, they don't guess again now. It was before that people are doing bad work going investing and so guess work. No, today people know where they should put their money and why they should put them, and work to assess a company to know whether you are doing well or not. On that note, I believe that until they start seeing a positive number from Adova, market will appreciate the company.
Okay.
Not only that one.
Okay.
You see, if you can go and acquire from the core investor at 66 naira 25 kobo, now it's trading 13 naira. Why don't you acquire more? Because nothing stops them to increase their holding. The fact that they are not buying from the market to remove more who are willing to sell, rather they go extra mile to acquire another oil company, it shows you either they are doing something that people doesn't understand, or they are not in business. Yes, because when it is cheaper, you acquire it at 6 naira 25 kobo. Now it's 13 naira, you are not buying. And nobody said that you cannot buy your own shares.
Yes.
The owners, they can buy. You remember that Ardoba is among those companies that have bought the marginal field.
Yes.
They are successful in acquiring the marginal field, meaning that they are diversifying into the crude oil. Yet the bottom line is not showing anything. So if you keep on expanding and yet you are not proving your worth, you will end up to find yourself in the situation that you want to find themselves. They go into so many feet and their price crashed from 120 naira to less than 10 naira. You don't over-expand, don't over-trade. Do it with caution. That is my advice.
Thank you so much. I was going to ask him what his advice would be for them, but he has already answered. Okay, don't overtrade and all of that. All right, thank you so much for your thoughts. And just in wrapping up, I do not know if there is anything you have for investors. I mean, that's why Analyst Hangout is here after all the reviews.
We don't do that. Investors should be very careful. When a company is not consistent in release their number, be very careful to be aware of that company. Because if they are doing well, they should tell you what they are. Also, like Alaji just said, when a company is expanding, over-expanding, also what over-expanding lead to lead to Owando. If Adover is going that direction, they are buying, new field, new oil field, they are acquiring some retail company, and we are not seeing this on their number. They need also to rethink, because when you over-expand, you can see the life of assets as they're expanding, their numbers are improving. You can see the top line of that.
I was going to ask, what's the difference? Why is it that, I mean, the same thing Access is doing, Adover is doing, but it feels like Access is seeing results?
That is the management, is speak a lot in the company. That's why you look at who are the management team, what is their vision, where are they going. You can see the difference now. You just mentioned it. You can see what is having access to. The assets drop as low as, pull back to as low as almost 920. It has gone back to 970. You can see a trend also in that stock. You need to look at companies that are well run, and also when people appreciate you, when assets is just starting, when they start seeing the number into the future, people appreciate assets the more. But if Adover from tomorrow we start seeing the positive number, market also appreciate them. You can see that because market is not seeing Owando numbers, that's why they kept Owando where it is. They don't do what we call speculation in Owando. The big boys with the PFA cannot invest in a company where they are not seeing number. And you have to see the end to know how this company has fared for so period, for you cannot project the future for the company. But when you are not seeing the past, the president is always shaking, then how can you project
for the future?
Yeah.
All right.
Ambrose, even for the assets, you remember when assets acquired Diamond Bank, the price crashed to less than 5 naira because people did not believe that they can manage Diamond Bank.
Yeah.
But they were able to go above the board, and today their price restored back to 9 naira.
Yeah.
What does that mean? Yes, if you acquire people doubt your acquisition, the price will go down. But as soon as you prove beyond reasonable doubt, the market will want to remain just.
Yeah.
Total was trading at 110 naira, 111 naira. As soon as they declare good dividend, today total is trading above 200 naira, getting 100% in less than a year.
Yeah.
So prove it, the market is ready to reward you. If you do otherwise, the market will over-punish you.
That's a
Thank you, sir. I like that. Thank you very much, sir.
Thank you.
Thank you, sir. Yeah.
Well, I guess this is a good place to end the conversation for today. I mean, we had amazing analysts on the show today. Here with us, Ambrose Omodio, the CRO, Invest Data Consulting. Thank you so much for coming today.
Thank you for having me.
Thank you for your thoughts. Thank you for always being there.
Thank God. Yeah.
All right, and virtually we were joined. Well, we still have with us Alhaji Kurufi Garuba, the MD APT Securities and Funds Limited. Thank you so much, Alhaji, for joining us.
Yes, I'm very happy for that, and I advise our investors to watch out those companies that will pay interim dividend very soon.
Yeah.
Take position now.
Yeah, thank you, sir.
Thank you so much. And of course, we were joined by Dario Sunday Shegun, independent stock market analyst with TradeLines.biz Investment Limited. It had to go at some point. Thank you so much for being a part of this show. We do appreciate you. And of course, we had Aruna Kebira Jimo, the managing director and CEO, Global View Capital Limited. He also joined us earlier on the show. Thank you so much for being a part of the show. And many thanks to you also for watching. Do you have a great weekend? I am Perpetua Fasami Peter. Bye for now.
That's it.